Okay, welcome to my stock market technical analysis. We are going to get right into the charts. We are looking for profitable trade ideas. If you guys find value in this kind of content, drop me a thumbs up, subscribe, and additionally, as I go along, if you find value and you're interested in learning this as a skill set, I have a technical analysis course, link in the description below. Finally, we do have a private member group, $5 a month. I'm giving additional trade ideas, additional market insights. I'm in there pretty much every day, and it's $5 a month, so not a whole lot to lose. You can always cancel after a month if you don't find value. Link in the description on that one as well. Triple Qs, guys. This is our tech sector. We have the Fed coming out on Wednesday with their rate hike decision. I think right now it's priced in that we're going to get a 25 basis point hike. So I believe that's what's priced into the market. That's the highest probability outcome. So if we see that, really it's going to be, well, watch what the market does, all right? The market's rallied, especially triple Qs, the tech sector, has rallied into this Fed meeting. I'm looking for it to sell off after the Fed meeting or possibly before, okay? We're starting to see some selling showing up this morning, and there might be some nervous longs or people looking to take profit into the Fed. Again, if you have a large position and you're profitable, say if you're long on the triple Qs, why risk it going into the Fed? It just doesn't make sense. So I would take profit. That would be my how I would treat it. So on triple Qs, we've got this hourly chart. We've got this upward trend line. We've been kind of walking up, starting to break up. You can see we gapped up this morning and it rallied, but now it's starting to sell down. We're starting to break up. So I'm looking for some selling today, to be honest. Probably sell down to about 304-ish, 303.88, somewhere right in there. And then when I flip over to the NASDAQ futures, just on the hourly chart, you'll see very similar. This trend line is a lot cleaner. You can see support. We've got support through here. Okay, and we're starting to break down. The hour's not closed. We've got this hour just opened up, so we'll see how that ends out. But, as of right now, it's starting to break down. So we'll see if that, get some sort of a breakdown. And then we'll start to sell down, most likely, into the Fed. So that's what I have on the hourly chart. And also you can see negative divergence right there on the hourly. Okay, so we recently just made a divergent high. So it tells me that we're likely going to start to sell down in the near term. And then if I go back to the triple Qs, tech sector, and I look on the hourly, again, divergent high this morning, all right? So popping up, making a new high, but that was a divergent high. So again, I'm looking for selling, probably selling to continue into the Fed, and then we'll see how that works out after the Fed. Now on the daily chart, you can see here the high that we made today was about 309.44. And the former high is about 311.88. So, we definitely would want to see, well, I don't know if I want to see it, but I could see it pop over that and make a new divergent high on the daily chart. We are diverging on the daily as of right now. You can see we had a high right here, this high right there. We just made kind of an equal high on much less momentum. All right, momentum is clearly lower than it was previously. So we are starting to diverge on the daily. Whether we get that new high over that 311.88 or not, I'm not exactly sure. From my perspective, I think it makes sense to have a short position. Okay, and that's how I'm positioned right now. I'm staying short into the Fed with the divergence that we have, and I'll show you guys one of the reasons why I like to remain short. Let me wrap up the broad markets. If I go on the daily chart on the SPY, you can see we're clearly above the downtrend line. So here's your bear market, all right? And there's all the reactions in the bear market. We broke out, we back tested, we broke back down, we broke back out. This is indecision time. It's kind of chop zone. And so the market's likely going to determine its next direction after the Fed. Doesn't mean it's going to be, the minute the Fed comes out with the rate hike decision, because that's just the algos jumping in and just taking quick positions, the high frequency traders. You got to give it a couple, really a day or two to let the market really show you the next direction. I'm anticipating it's going lower, and Some of that has to do with the divergences that we're seeing in the tech sector especially. Okay, small caps, IWM. Again, here's your downtrend line, the bear market in IWM. There's a breakout, a back test, rallied, come back in for another back test, and it's just to the chop zone. You can see we're breaking down, recovering, breaking down, recovering, breaking down, recovering. This is the chop zone. It's the battleground, indecision time. So again, we'll wait till the Fed clears out. Okay, let's take a quick look at these FANG stocks because obviously they're the heavy hitters in the market. And we'll see where they potentially are heading. So Amazon, all right, I've got resistance right there in Amazon at 103-ish. We also have this island reversal top. So again, I think the most this is likely going to do is kick back into resistance and then fail and continue lower. No real indication of divergence. So yeah, potentially a little more upside there on Amazon. Google's rallying into the major zone of resistance. You can see here on GOOG, we've got resistance. There's another reaction, and there we are right there. So that's an objective area to short for sure. Do I want to, I am short this by ways of triple Qs, but it is at resistance. This high is also a divergent high. Oh, no, never mind. I take that back. Not a divergent high, just a rally into resistance. All right, the 200-day moving average. To see this popping like this right into the Fed looks like a stop rate. I mean, this looks like the end of the road for Google. I don't see it rallying too much beyond this. Apple. Apple is at resistance right here. You can see I've got lots of marks on it, but it's basically right there at 157.50-ish, somewhere right in there. And you can see we've had lots of reactions on that level. I pointed those out. That move into that resistance is a divergent high right now. So we made a new high or an equal high basically from back here. There's an equal or new high on less momentum. That's negative divergence, indicating we're likely going to reverse trend probably after the Fed. I don't know if they'll do it ahead of the Fed, but that's what that one's doing. Meta is rallying right into resistance here at big resistance right there at 202.60, and so far being rejected. You can see the selling is showing up there. This high that it made also right here in this cluster is a divergent high. So you can see it was a former high here, then we made a new high and less momentum right there. So negative divergence on Meta, that's likely the end of the road for Meta, and we're going to start to sell down. Microsoft, brand new high right there 2 days ago. That was a divergent high, and ever since they made that divergent high, the selling's shown up. So that is, and also big resistance on Microsoft at 282.66. As I roll out, you can see there's several reactions of that was former support, and it was resistance. A little pop right there, but the pop above it right there, if I kind of erase all my scribble scrabbles, that was a gap up and then a gap down. So island cluster top, just a key reaction level right there. And we had two gaps there, and there it hit that perfectly, and it's been selling off ever since with that negative divergence. So that's a very bearish setup for Microsoft. That's a big weighting in the market. Okay, I'll just go through various stocks I've talked about just to give an update, and then we'll wrap up. Guys, again, if you're finding value in the content, check out my course, join the private member group, link in the description below. I think there's a ton of value in both of those products, and they're priced affordable. All right, so LLY, we have resistance at the 200-day simple moving average and this trend line resistance right here at about 332.20. That's pretty good resistance. You can see all the former areas of resistance there. Lots of reactions there. It was support right there, resistance there, and we're there again. So far, they've rallied it. They've been trying to break above, but the sellers are right there stepping in and continuing to move that down. So I'm looking for lower prices. Probably looking for this to move down to the next target, which is about 301.11. MRK, since we're on the healthcare stocks, we'll cover this one. Again, just going nowhere. All right, we're downtrending. All right, we are making a series of lower highs. We need to make a new lower low, and that's where I think we're heading. So next level support, it's about 102.75, but we hit it previously right there. So I think we get down there, we'll probably break and head right down to the 200-day moving average, about 98.30 for the next profit target. Okay, semiconductors. I know a lot of people are interested in NVIDIA and the semis. I'll go through that. I am short both the broad index, SOXX, and NVIDIA, as well as AMD and AVGO. All right, so here's what I got on the semis. Rallied up today, made a new high right ahead of the Fed, right there, boom. And that was a high above the former high, which was about 438.09. Well, we made an equal high. You can see we basically just really made that equal high right there. Okay, on much, much less momentum. So that's negative divergence on the daily chart on SOXX, telling me that we're likely, I think we've seen the high in this one, maybe after the Fed, just in a brief hour or so after the Fed, they pop it above and make a slightly new higher high. I would expect that to get sold into and us for to sell down. Back to the trend line. All right, we have a trend line on the daily chart. You can see here, support, support, and this one didn't quite hit it, but I do think we are heading back down there. Maybe get a little reaction there. They'll try to probably hold that, and then ultimately I do believe we will break. The negative divergence on the daily is indicating that this upward trend has likely run its course, and we're now going to see some selling. The last time we had negative divergence right here in the SOXX, we did get the pullback right here from the high. Looks very similar to what we just had, but from there, high down to the low, 15%. So if I mark something like that out from here, that puts us down in the range of, you know, all the way down here, maybe this little gap fill down here at 365.44, something like that. So that's what I'm looking for. We're seeing selling now showing up. AMD. So on this one, I've been kind of day trading this one a little bit. Yesterday, or I shorted this last week. I talked about that, especially to the private member group right there at major resistance. If I roll out, you can see, look at the reactions. I've got all kinds of reactions at that key level. Okay, there's a gap right there. There's resistance, another reaction right through here, another one right through there. Just a major, major level. So we hit that level last week on Friday, I believe, and we have negative divergence on the RSI and PPO on the daily chart. So this rally into the highs is a divergent high, meaning we made a higher high in price, lower highs in momentum on the daily. So I think this is likely topped out. Now, whether they pop it around in, you know, after the Fed, I mean, obviously we could do that. I think that gets sold into. So we're at or near the highs in this rally is what I'm anticipating. All right, whether there's a little post-Fed pop and some algo games that get played, I think that gets sold into. But you can see today they rallied this thing up this morning. If I go down to the hourly chart, they rallied it up this morning right into that key level resistance, and boom, sellers stepped right in. So I saw that. I re-shorted the thing. I basically covered the short the other day when they gapped down, and then just re-shorted it this morning at that rally into resistance. They sold it down. I think, you know, I've covered it as of right now. Kind of closed out the trade. It was just a really fast, like 4% trade basically for me. Or maybe it wasn't quite that much. It was about, about 4%. In just a day, right ahead of the Fed. Might as well take my profit and then let the dust settle. If they rally it back into the resistance after the Fed or something like that, maybe they pop it right back up, I'll re-short it right back up there again at 99.80-ish, somewhere right in there. Regardless of kind of the very short term, longer term, I do believe this is heading down to this trend line on the daily chart, all the way down here, which is about 70, you know, it depends on when we hit that, but I think we work our way down, down 78.50s first level support, and you got this trend line down here at about 74-ish. And then from down there, we'll see. I believe probably lower, but we'll see. Okay, NVIDIA. I get comments on this one almost every day. I know there's people that are short in this, and they're maybe frustrated. I'm short in this. Obviously, it's gone against us a little bit, but technically, it still looks like a good short. And so I have to stick with shorts that are technically still sound, all right? And on this one, you can see what I have is a bearish rising wedge. All right, we broke down a little bit, not super impulsive. They were able to recover the wedge, and we basically are at the very apex of the wedge. So this one's obviously push the extremes of this bearish pattern. However, the highs each and every day that has just been kind of grinding higher, especially leading up into the Fed, are just divergent highs. All right, this thing's grinding higher, making negative divergence, and that has not been negated. Those divergent highs are still there. And if you can zoom in on the RSI, you can see, if I can get my thing right, there it is. See, negative divergence on the RSI starting to turn down right there. So as strong as the price action has been, the momentum is not there to match it. So again, I like this as a short. I think we're probably going to sell down right after the Fed. Obviously they can play games, right after the announcement tomorrow. Maybe this thing pops up and gets sold into and down she goes. That's what I'm anticipating. So that's why I'm still short in this. And I still like it. Technically, nothing is wrong for this short trade. It is still a short setup. Gold selling down pretty strong today across all the miners. Now, again, I mentioned, especially to the private member group, but I also believe I did to the channel, that I was taking profit. A couple days ago is when I did that, last week. As we were having a strong rally in the miners, I was taking profit. So I don't have a whole lot of miners right now. I'm kind of just waiting on these, not really making any moves. I'm not buying the dip. Today they're basically dipping pretty strong. Look at this one, down 25%. Must be some sort of news event. That's a divergent low, so that's kind of interesting potentially. But I'm going to just sit tough and not make a decision on buying the dip on these until we clear out the Fed. It doesn't make sense to take a large position in such a rate-sensitive sector, which is gold and gold miners, right ahead of a rate decision and the Fed coming out. So that's where I'm sitting on those. Ag commodities. The two that I really like the most right now are Joe and wheat. Joe just hit support right down here. I talked about that being an objective long, especially to the private member group. Right there on that day, 49.50. That is where I went long on this thing. It is up as of right now, roughly 4.5%. Today it was up almost 5%. And I think this will continue to rally. So if I look at the futures, KC, you can see on the futures that we basically have been hitting decent support, which was former resistance right there at 173.25, and still holding that. So again, looking for more upside here in coffee. And that's it on that one. Wheat, let's go ahead and look at wheat. Wheat's has been tough. It's definitely still a bullish setup, just can't seem to get going. So on wheat, you've got bullish divergence on the daily chart. All right, we have this bullish kind of falling wedge pattern. We broke out, breakdown, it's just kind of getting a little messy in terms of the chart structure. Down a little today, but I don't think there's anything technically wrong here. Still looks like a bullish setup to me. ZW, we'll look at the wheat futures. Same kind of picture you can see here. It's selling down today, but it's still has bullish divergence on the daily chart. So I don't know. Maybe it wants to go make another divergent low. That's completely possible. Divergence doesn't necessarily give us a buy signal, but it does tell us that the conditions are there for a trend reversal. And we just look for some sort of a breakout. Right now, if I roll out, it's definitely in a zone of support, which is right here. You can see former resistance, there's former support, several reactions there, a reaction there. So I don't know whether it wants to make a new divergent low or not. I think it's still in a pretty strong zone of support with that divergence. So I would be looking for a rally here as well. Okay, SMAR, Smartsheet. So this one, very bearish setup. We're looking for price action to help confirm, but you have negative divergence on the daily chart, on the RSI and the PPO. Okay, we have a bearish rising wedge on the daily chart. All right, nice clean wedge. We have a breakdown. There's a sell signal right there. So you broke down. That sell signal was followed by a gap down and pretty impulsive selling. Then they gapped it up and they've been just back testing the trend line. So that's really it. That's all that it's been doing for the last couple days leading into the Fed, is just grinding higher, back testing this trend line, running a bunch of stops, for people that maybe took the short right here on the sell signal. If they can't handle the technical setup, then they're getting stopped out. And today is also a little bit more significant because today we made kind of an equal high right in here from the former high. You can see right, if I can get my line right in there, there's an equal high. Sorry, the line tool is not sticking. But there it is, and that's a divergent high as well. So new high today, or equal high as the former high, much less momentum. That's a negative divergence on the daily, and I think that's likely it. It just makes sense that we've rallied into this trend line, made a new divergent high right ahead of the Fed, and now this thing's free to actually start to sell down. So I really think that this one's heading down to fill this gap, 3280s. And that's really the trade, I think, on this one, is just a move down to fill that gap. But from where we're at, that's a drop of potentially about 30% or so. So that's what I'd be looking for the trade setup. That's all I got, guys. I'm going to go ahead and wrap up, and we will get this one out. Drop me a thumbs up on your way out. Catch you on the next one.